Hi everyone, this is a technical analysis on EURUSD. Let's start with a fundamental overview first. The US dollar has come back under pressure recently as we got a couple of soft US data. The US has some manufacturing PMI disappointing the market as it came lower than expected, and the new orders index dropped further into contraction. The US job openings yesterday showed some more cooling as the data missed expectations by a big margin. The Treasury yields fell as a consequence and weighed on the greenback. In fact, the recent appreciation of the euro has been mostly driven by the US dollar side of the equation. From a monetary policy perspective, there's now a 50-50 chance of either a 25 or 50 bps cut at the upcoming FOMC meeting, so the NFP report tomorrow will decide by how much the Fed is going to cut. For the ECB, the market sees a 99% probability of a 25 bps cut at the upcoming meeting, with a total of 60 bps of easing by year end. Now on the daily chart, we can see that EURUSD eventually fell below the 111.36 level and extended the drop into the 110.25 level as more sellers piled in. The target for the sellers should be the major trend line here around the 109 handle. The buyers, on the other hand, will likely step in around the trend line to position for a rally into the 113 handle with a better risk reward setup. On the 4-hour chart, we can see that after breaking below this minor upward trend line, the bearish momentum increased as more sellers piled in and the buyers squared their positions. The price is now testing a strong resistance zone around the 111 handle, where we can find the confluence of the previous swing low level and the 38.2% Fibonacci retracement level. We can expect the sellers to step in here with a defined risk above the resistance to position for a drop into this major trend line. The buyers, on the other hand, will want to see the price breaking higher to increase the bullish bets into new highs. On the 1-hour chart, we can see that we have this counter trend line defining the current bullish momentum. In case we get a rejection from the resistance, the buyers will likely lean on this trend line to position for a break above the resistance. The sellers, on the other hand, will want to see the price breaking lower to increase the bearish bets into new lows. These red lines define the average daily range for today. For the upcoming catalysts, today we have the US ADP, the US jobless claims, and the US ISM services PMI. Tomorrow, we conclude the week with the US NFP report.